The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9 a.m. Eastern Time, Thursday morning. We got about 24 minutes to go until the start of trading and the opening bell, and we have markets in positive territory, driven by the likes of the strongest company in the world. Apple beating in a big way last night. You had Facebook beating as well. We have Amazon accelerating higher ahead of their earnings tonight. As I just mentioned, I'm going to jump to Amazon because they are the main event after the close tonight. Talk about some expectations being fueled this week alone. Last week, we were trading with a 3,300 handle as we ended Friday trading 3,340, that or thereabouts. We're up $160 on Amazon this week, just in the 3 trading days coming into their earnings event today. You jump over to the Analyze tab. Amazon's looking for a $120 move in either direction. That is priced in as of the earnings, as of the options pricing last night. Probably a pretty similar one-day expected move coming into their options event when you look at the weekly. So that is combining Thursday and Friday. So somewhere in the neighborhood, about $120 to $135 move priced into Amazon with their earnings in either direction tonight. A lot of that optimism to the upside after everything we've gotten from the likes of Apple, Facebook, Google, crushing it out of the park as well. Now, Amazon, just for some context as well, we got a lot to get to, folks. We got GDP numbers we're going to jump to in a moment. We got weekly jobless claims in a moment. But just to see the expectations here, boy, you don't have to go back far, folks. March 26th, as I mentioned, you got a 2,900 handle in Amazon. It's April 29th, just barely a month, and Amazon's traded up more than $500 from that price point. I mean, you're talking about basically more than a 15% pop in the month coming into it. And really interesting that you're going to be pushing right into the all-time highs of Amazon coming into their earnings tonight after the closing bell. Okay, what else we got going on? Let's jump to the GDP number. Market-wide, 6.4%. Annualized number for GDP growth, annualized pace of almost 19.1 trillion. Consumer spending, quite a number there. Consumer spending rising 10.7% on an annualized basis. So GDP expanded at 6.4% annualized. That was following 4.3% in the fourth quarter. So this is first quarter GDP numbers we just got. Personal consumption, the biggest part of the economy, and I have the number here. Consumers account for 68.2% of the economy. That's a CNBC article I have up here as well. So consumers, almost 70% of the economy, and they're spending personal consumption, biggest part of the economy, 10.7%, the second fastest since the 1960s. Folks, it's the 2020s. That is quite a far cry back in history. Inflation-adjusted value of domestically produced goods and services climbed to an annualized rate, that's where they get the 19.1 trillion, indicating that it will probably eclipse the pre-pandemic peak of nearly 19.3, so right up against that level. And of course, they explain it. You got rising vaccinations. You have all of that going across the board there. Now, consumer spending, so 10.7%, that's compared to only a 2.3% increase for consumer spending in the previous period. The expenditures were largely focused on goods, which increased 23.6%, but spending on services, which had been the missing link in the recovery, still grew by 4.6%. We got a long way to go in services in terms of opening back up in a big way. Consumer spending, of course, a big part of that. Stimulus checks in a big way, but nonetheless, strong numbers on the GDP front. Okay, now we jump to unemployment claims. First-time unemployment claims, 553,000, decrease of 13,000. The market was looking for about 540, so right next to where we were. Prior week's total were revised upward to 566,000. That number continuing to drop, but it's a pretty staggering number on a weekly basis. in this market, any other universe, any other year, that would be a staggering number, but actually a decrease from where we've been during the pandemic most of the time. Okay, so those are the two events we get right at 8:30. We got GDP numbers pretty strong in there. We get weekly jobless claims pretty strong in there as well. Now, just since 9 o'clock, a little bit of a sell-off. I mean, you're talking about only 5 points in the S&P here. This trend line we're looking at on the S&P, that's correlating to a daily trend. Technical analysis, folks, it is an art, not a science. Where the upper boundary and the lower boundary line rest on this chart, that is up for interpretation. But I think that's a pretty solid chart I got up there in terms of that trend line. We might be able to deviate it slightly. We'll activate that drawing on the Thinkorswim platform. There it is. And, maybe we can inch it up a little bit for linear regression-wise, but I'm pretty sure that it would fall somewhere right here. And as you see, we're just bumping up against that upper boundary. But guess what, folks? That doesn't mean you're going to trade to the lower boundary line, because for many periods during this recovery, the market has just bumped up against that upper boundary line continually. I mean, you don't have to go back far from really where we were in November. You rose from 3,600 all the way to almost 3,900. Yeah, 3,918. So you're talking about basically almost a 10% run, bumping up against that upper boundary line the entire time. But as you see, we've been sitting on this boundary line now since April 9th, and we're going to open almost at all-time highs across the board, right? NASDAQ 100 all-time highs. You're going to have the S&P opening at 4204, pushing all-time highs. We're going to have the Dow right now, 33,000. We're just off the highs that we had in the last couple of weeks. And where we are in the Russell, you're trading up 18 points right now. We're going to be about 40 to 50 points off the all-time high, but pushing it pretty close as well in the Russell 2000. Checking out Bitcoin pulling back a bit, some volatility in Bitcoin. I mean, watch out here. We got, if this is an A to B, C to D down, you go from 65,000 to about 47,000. So you're talking about an 18,000 leg. We retrace 50% of that move to about 56,500. So yeah. I mean, what does that bring us down to? 38,000, that or thereabouts. We'll back up the chart a bit. And where does that 38,000 fall on Bitcoin? Right here. That's where it could be. And that might be the next stop, folks, if this thing doesn't hold up, because we're getting a little dicey here. We'll jump over to Coinbase to see how they're trading, right at about 300 for Coinbase shares. All right, let's jump over to the big dogs in terms of Apple and Facebook last night. So Apple, we're trading at 137.18. We were at 133.58 yesterday. A remarkable quarter for Apple when you think about what they've done. Really interesting when you look at, we're trading at 137. We were trading at 137 back in September. Well, guess what, folks? That's what's called catching up to the multiples of a company. When you price in the type of growth some of these tech stocks are pricing in, you better believe you better crush it. Still staggering that you have Apple only up $3 or $4 with the type of numbers they put up. Let's get into it. The big one, they beat across the board. The biggest one is revenue. How much money are you taking in, right? Apple's going to be pushing it to the bottom line. They got a $90 billion stock repurchase program they added to. But you're talking about almost $90 billion. They took in almost $1 billion a day for the first quarter, up 54% from the same period in 2020. Now, they had the super cycle, right, fueled by the 5G iPhone 12. I got mine a while back now, 3 or 6, but they're in that super cycle. So that's a reason why they've really accelerated. iPhone sales surged 66% in the fiscal second quarter, first full period for the Model 12. I mean, look at those numbers. Just staggering that Apple, a company of this size, continues to grow the way they do. And they just beat everywhere. Whether you talk about their iPad sales, whether you talk about the Mac sales, it's across the board. We'll get back to it at some point later in the hour. But Apple shares trading higher, and Facebook. Boy, we're going to talk about Facebook as well. They are just a money machine right now. Facebook up $23 in the aftermarket to $330.40. And that's after accelerating pretty dramatically higher in the last couple months. Stay tuned, folks. We're going to be talking to our man Kevin Hinks from Thinkorswim when we get right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps positive by 29 points right now. We got about 12 minutes to go until the opening bell. We have Apple higher, biggest company in the world, only going to get bigger on the opening bell. We have Facebook accelerating higher. And we got another big dog tonight. We got Amazon shares, and Amazon trading right at 3,500 coming into their earnings. Not that long ago, folks, we were trading at 2,900 with a 2,900 handle as recently as March. Let's jump over to our man, Kevin Hinks. Every trading day, folks, 11 a.m. Eastern Time. The TD Ameritrade Network, Fast Market, 11 a.m. to 12 Eastern Time. Kevin Hinks, Alex Coffey, and the team breaking down hypothetical option trades, breaking down the market. Quite a week to talk about everything going on. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. You know, another day, another 57 names in the S&P 500 coming out with earnings, Tommy. And yesterday was a blockbuster as we thought it would be, but you know, everyone thought that Apple would be the biggest blockbuster. It turns out, with the world of digital media, it's Facebook that's popping. And, you know, Apple may be a stock that has to hold on here during the day, as it's only up, you know, less than $3. But,
yes.
But Qualcomm, big numbers from 5G, Facebook up about 8.5%, not 9%. So, NASDAQ looking really good pre-market. The GDP data was, strangely enough, it's hard to say a 6.4% print on GDP is disappointing, but it actually missed. And the whispers were for even a higher number than that. But personal consumption, 10.7%. And here's the number that really jumped out at me, Tommy, when I looked through the data. Personal savings. Now, $4.12 trillion in the U.S. Think about that when you think about buying dips or buying vacations, or the U.S. consumer in general has a boatload of savings.
Talk about some gasoline ready to sprinkle on that fire, right, Kevin, and light it all up, man. I agree. Just remarkable numbers, and yeah, pretty staggering, the expectations we're dealing with. But, man, talk about, you know, in my head, expectations for some of these tech companies. What's it like to be an analyst today on some of these companies? I ask almost kidding, but they, you know, I can't imagine the ability to beat by more than $10 billion of revenue in 90 days, which is actually what Apple did. Facebook through the roof. Even some of the companies that have pulled back, like Microsoft, for instance, pretty strong numbers on some front. They kind of just met expectations yesterday, and they got punished because it was so much higher. But just remarkable beats, Kevin. Facebook. And, of course, let's jump right to Amazon, man, because we got Amazon after the bell tonight. Amazon's just been trading up all week ahead of their earnings. We have a 3,500 handle on Amazon, Kevin. We had a 2,900. We had a 28 handle as recently as just in March. So what do you got? You guys going to be talking about Amazon, I imagine, on the program today?
Of course we are. We'll start out with Twitter, which is slowly but surely becoming Jack Dorsey's other company. And we'll look at, does some of this digital spend that you've been seeing out of Google and Facebook, does that move over to Amazon and Twitter? I think that going into today's earnings, that's the biggest question. Are they participating in some of this massive digital spend that's going on? So, yeah, we'll look at Twitter. And then, of course, like Folio, we'll do a presentation on Amazon. And then we'll look at one of Apple's suppliers, and that's Skyworks. So three big, massive names today that we'll be working on and trading during the day.
It is remarkable, Kevin, when you think about, the expectations of some of these companies. Facebook, just for example, already lofty expectations coming into their earnings event. We were trading as recently, backing things up because the markets had quite a run from the lows of March. I mean, Facebook was trading at 255, Kevin, on March 8th. We're going to open at 330 today. That is a 30% acceleration in the price of Facebook shares from March 8th, but they delivered, and we're seeing it across the board. I think that's part of the reason you're seeing some of these companies that have lofted, ahead of themselves, and it's what we talk about and what you guys talk about on Fast Market and the TD Ameritrade Network is what is the expectation, right? What is the expected move? What is the expectation on the market? Now, Facebook blows it away. Amazon, they have a $120 move, I think it was, as of last night, priced into their options. I'm pulling it up. Yes, about $120. And this is of last night's options pricing, $137. Lots of speculation. I hear like maybe they'll stock split in the retail trading world. Lots to think about on that front. But we'll find out, man. It's quite an interesting time, Kevin, when you have GDP numbers, weekly jobless claims. We got a Fed decision yesterday. Apple out with their earnings. Amazon out with their earnings tonight. When you look at like this market and you're trying to combine these, and it's almost an impossible question, but are you looking just even personally like the GDP numbers of that and driving forward, or the expectations of some of these tech companies and how they are competing against each other for the macro look versus like company by company look of how they go forward? I don't know. Did I phrase that all right?
Tommy, we trade so much off of expectations. And, GDP, though a historic number, missed expectations by a tenth on the consensus, and the whisper numbers were even higher than that. That's why you saw, at least for a short time, the 10-year note, the 30-year bond rally off that GDP number. Now, they've come back down since then, but expectations are so important. Like you mentioned, for Amazon, the whisper out there is they're going to announce a stock split, right? So now that expectation and that rally that you've seen in Amazon, I mean, it's up, $45 pre-market. Guess what? If they don't announce a stock split, no matter what their earnings are, that could be a disappointment, because now that is in the expectations that they're going to announce a stock split. Now, if they do, look out, because that could get really fun. But these names trade off expectations. And, what you saw in Facebook overnight, come on, they beat earnings. They beat their EPS $2.30 versus $3.30. They beat by $1 on earnings per share. So just like I said, video game numbers that these companies are coming out with right now. And you know what it shows? And one final thought. All the stay-at-home trade that everyone thought people would transition out of as we reopen, some of those stay-at-homes are getting stronger and doing better in the reopening than they did in the stay-at-home. Digital ad spend is growing, and some of these companies are benefiting from that. So it's just it's like a fire hose. It's not a lawn hose. It's a fire hose.
I completely agree, man. Google really set the mark earlier this week with some staggering numbers, and I thought to myself, maybe Facebook is getting an unfair comparison with a company like Google because YouTube is not exactly the same, right? But guess what? I was wrong, man. Facebook crushed it out of the park. The digital ad spend across the board on these companies, pretty staggering. Apple, it's interesting how they're all in their own little sectors. You know, Kevin, you have Google, of course, and what they're focusing on. You have Apple that's selling so many iPhones and iPads, completely different model versus the digital ad spend, and they're all beating by like 10% almost on revenue on sometimes, and 10% on Apple's case was more than $10 billion in 90 days added to their revenue. Well, Kevin, man, we look forward to the program today, as always, the most wonderful time of the year. Today we get Amazon. We'll see how we open up with Apple. We'll see how we open up with Facebook as well. We always appreciate the update and the education, Kevin. We look forward to the program, man.
Have a great day, Tommy.
You too, Kevin. Thanks so much. Folks, I mention it every day this week, especially. Tune into the program at 11 o'clock. They break down the hypothetical trades, the option markets. Download the Thinkorswim platform. Great time to do it. You can download a demo account, check it out, follow along as they walk you through those trades. Amazon, we'll see. The other interesting thing, always interesting, when you got a stock consolidating for like 10 months, and we're going to be bumping up right against all-time highs as they come out with their earnings. We'll see how we play out. Stay tuned, folks. We'll be right back for the opening bell.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We have the S&Ps positive by 33 right now. We get the NASDAQ 100 up 154 points, 14,051. We'll jump over to the two stocks going to be moving dramatically on people's. We're going to jump to Qualcomm as well because that's a big one. But Apple shares up 2.5%, giving back some of the gains, but still a strong open, up $3.40 about. Facebook shares $330, up 7.5% for Facebook shares. Qualcomm, as Kevin mentioned, to the upside, 6.2% to the upside, trading at $145 right now. And Amazon, ahead of their numbers, continuing to trend higher, $3,511 for Amazon. It's possible we hit an all-time high on Amazon before we even get to an earnings event today, as Amazon just continues to push higher. You back it up. Last week we were at $3,300. We added $200 in less than a week of trading on Amazon shares right now. You're trading at $35.07 for their numbers. All right, jumping around to what else we got going on in the markets. New York City. They're going to be opening July 1st. So Mayor de Blasio says New York City will reopen on July 1st. The summer of New York City is coming, mayor promises. Gyms, stores, arenas, restaurants headed for full operations. New York been shut down more than most. July 1st, so right around the corner. July 4th, one of the dates that President Biden's talked about for really a reopening. Hopefully people continue to get that vaccine. It is safe, it is effective, folks, and we get over this hump. But the times are coming. It's encouraging times, and hopefully we start seeing those case numbers decreasing as vaccinations continue to rise, but strong numbers strong numbers for the economy in terms of that GDP number indicating what we want to see, the growth, and as Kevin talked about, the spending that we might see for the savings that consumers have, consumers accounting for almost 70% of the economy. We'll find out. So Amazon, interesting, ahead of their earnings event tonight after the bell, they push out a story last night, almost competing with Apple's earnings, that they're going to be spending $1 billion on early pay bump for hourly workers. So 500,000 of its hourly workers are going to get a pay bump between 50 cents and $3 an hour for most workers, take effect in May and June. So Amazon, on the heels of winning their union battle, I believe it was in Alabama, they make a gesture here, probably getting ahead of it with a little bit of a pay bump on their own right. And what they also had yesterday was Amazon basically winning one small battle in their suit against the government and Microsoft. So judge declines to toss the Amazon suit, claiming that Trump blocked their Jedi bid. So Microsoft was awarded that contract in October of 2019. Amazon saying that political differences contributed with President Trump. Not really an outlying claim if you think about what was said during the previous years running up to that. $10 billion that contract is worth. So the ruling means the lawsuit can proceed and does not represent the final decision, but it can proceed. So it's not tossed out. Pentagon said earlier this year that if the court didn't grant its motion to dismiss, it would reassess the future of the project altogether to avoid a long court battle. So a win in some ways there. You're talking about $10 billion. And one of the worries there for Amazon was that if they got locked out of that one, how did that proceed in terms of future contracts coming down the line and getting locked out of those potentially as well? So two stories for Amazon ahead of their numbers. We just spiked to 35.14. We're trading at 35.02 right now on their numbers. Okay, let's jump down the line and see what else we have talking about. So Facebook we covered. Comcast out with their numbers. They beat by 17 cents a share with 76 cents. Revenue also topping, driven in part by strong growth in broadband and wireless phone customers. Comcast shares up about 3%. CMCSA is their symbol. There's a pop to 56. And we were trading about 53, so you're up 3.6%. You put this thing on a 3-year weekly, the all-time high is 58.59 back at the beginning of March, and we're going to be pushing right near those highs this week. We're at about $56 for Comcast shares. Let's see. Generic was out with their numbers. I want to jump to eBay, though. eBay reported consensus beating results on both the top and bottom line, but the online marketplace operator gave a lighter than expected current quarter outlook, not what the market ever wants to see, folks. The market never cares about what you did for me in the last 90 days. If you tell me that the next 90 days to next year are not going to be what we thought they were, you're down 9.3% now on Amazon, eBay, not Amazon, as they gave a lighter than expected outlook and they tumble lower. Caterpillar, positive in the pre-market trading after they report beating estimates by almost $1 a share. Quarterly profit of $287, revenue above forecast as well. Caterpillar shares Oh, they give it all back. See, interesting stuff here, folks. That was from 239 to 231 on the open. Excuse me, got a little bit of a dry throat. 239 to 231 on strong numbers for Caterpillar. Excuse me, let's pull it back up. They beat on earnings per share by $1 a share, quarterly profit of $287. Revenue beats as well, spurring demand for equipment as the economy opens back up. But guess what? This stock has just traded from 87 to 240. You better believe there's some optimism built into some of these companies. I mean, take a look at Apple shares. We've chopped around for a bit, but folks, not that long ago, you were trading at 64 in Apple. You're trading at 136 right now, right? A lot of optimism built in. Even a company like Microsoft, you were trading at 140 at the lows. Yeah, we disappoint this week. We trade a bit lower, but we're $6 or $7 off the all-time highs in Microsoft right now. After trading pre-pandemic levels, you were still at 185 in some of these companies. Google, just a rocket ship in a big way, just remarkable. You were at $1,000 almost on the low, 1,013 to be exact. You're trading at 24.11 on Google shares, Facebook shares. Man, just a rocket ship. 325. We get back some of the gains. We were trading at 330 coming into the opening bell. But as I talked about, I mean, Facebook, you back up to the beginning of this year, you're trading at 244. When you back things up, we were trading at 255 in March. Folks, you're talking about a 30% acceleration in Facebook shares in the last couple months. I mean, this could potentially be an A to B, C to D, the way we're crushing past this potential B point here. You're talking about a B point of 304. You're talking about an A point of 137, almost staggering. That's $160, folks, for a complete run. We chop around from a period of about August, and then the run really begins in March. But if you're talking about basically a $160 run, if we ever have that run, you're talking about potentially starting from anywhere, even from 244, talking about $400 on Facebook, folks, but not out of the realm when we were trading at 330 this morning. There's 400 on the chart. How long it takes to get there, but man, just strength across the board in some of these tech companies. McDonald's. So McDonald's, everybody's crushing it out of the park. McDonald's, 11-cent share ahead of consensus. Yeah, the big one here is revenue also above forecast, boosted by a better than expected 13.6% jump in U.S. same-store sales. I think the market was only looking for like 7 or 10% or something. Where are we? Come on. Excuse me. So they have earnings of $1.92 versus $1.81. Disclosure, we have McDonald's in my newsletter. Rocket Equities and Options. You want to try it out, folks, head on over to the front page of TFNN. This one's had a nice run for us recently. We'll pull it up. Here's the potential we're looking at even. Why not? I think I got this on a 3-year weekly, and I'm going to zoom in on the action for our A point. And this is what we're looking at, folks, on in my newsletter. If you want to try it out, we're in a potential A to B, C to D. McDonald's really accelerating past the B point of 231. We're now pushing 235.63, positive by 1%. A lot of optimism already built in this thing. McDonald's just traded from 200 to 235 for a dividend stock like McDonald's, folks. That is quite an acceleration, but consumers are going to have cash, and the market's saying it on a weekly basis. All right, going back to the week of October 12th, 10.7 million shares. We accelerate past that the week of April 5th, 14.2 million shares. And we're sitting above that level. That would push us up to 255, $20 above where we're trading at right now. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. One of the companies that were reporting last night as well is Ford, kind of just not lost in the shuffle. But when you're competing with the likes of Apple, you're competing with the likes of Facebook, Qualcomm, all coming out with their numbers. Ford, though, pretty stark contrast in terms of the acceleration. Some of those companies trading higher. Ford down 8.6% today. They are getting punished because they're going to struggle to push out cars with no chips. They expect to lose half of their Q2 production amid chip shortage. You're talking about, I think I saw the number, 1.1 million vehicles, something like that they're going to lose. The company said Wednesday it now expects to lose about 50% of its planned second quarter production, up from 17% in the first quarter. The increase is largely due to a fire at chip supplier Renesas Electronics for Ford. Pretty tough when we're dealing with a chip shortage already, and then they got a fire going on at one of the plants that they're getting the chips they're actually getting from. They said the company expects to lose, here it is, about 1.1 million units of production in 2021. Shares of Ford, as you expect, traded down. The company's market cap, talking about $48 billion, a far cry from what a company like Tesla gets valued at, maybe rightfully so, as they diverge in their valuation metrics. But strong quarter, 89 cents they earned versus 21. They took in $1.3 billion extra than the market was thinking they would take in over 90 days. But yeah, that is the top of their guidance in terms of. So the company had estimated it would earn between $8 and $9 billion in the adjusted pre-tax profits in February. Okay, but now full year adjusted pre-tax profits expected to be 5.5 to 6.5, including an adverse effect of about $2.5 billion from the semiconductor industry. You can see how you can see how there's going to be winners and losers. I mean, you're talking about billions of dollars potentially these companies are going to lose because they weren't aware of the type of shortages you can have, especially when you're talking about now they're having fires at some of those plants. My head goes to, if those chips are so important that you're going to lose billions of dollars, I mean, you're going to lose a third of your pre-tax profit for the entire year. Then why were maybe some insurance factors taken out? And I'm serious. Well, if you're relying on chips from one plant in Japan to drive a third of your yearly profits, you can't make more chips right now, right? Because that's impossible. Everyone's fighting for them. But maybe you secure that type of risk somehow if you're risking billions of dollars of fallout on a fire, which obviously can happen. We're seeing the effect of it today, and you have Ford down about 9% right now on their earnings from about 12. Yeah, you're down more than $1.11 on stock that was trading at $12.40 yesterday. You put things up on the daily. We're now back to where we were in January for Ford shares, but a tough one there. Not sure how that plays out for Ford. This chip shortage, it's going to persist. I meant to say, longer than any of us really realize. I think we're waking up to it more and more as some of these companies continue to talk about those chip shortages and how it will play out to the terms of billions of dollars of their earnings. All right, let's jump to cruise ships. So Carnival trading up. We're up about 2.4%. We'll jump to some of the other cruise ships. They're all up today. The CDC saying it's committed to the U.S. cruise industry resuming operations by mid-summer. What that means and what the teeth of that really means, not sure, but the assurance comes after the state of Alaska last week joined Florida's April 8th suit to overturn the CDC decision to bar the U.S. cruise industry from immediately resuming operations, halted for a year because of the coronavirus pandemic. Cruises are a tough one, folks. In terms of if there are any cases that exist, you get them on a cruise ship. Does the cruise ship get locked down? We still have a pretty high level of cases on a daily basis, folks, persisting in this country, let alone internationally. But here's where it comes. So the assurances come after that Alaska joining the suit. And let's see. If a ship attests that 98% of its crew and 95% of its passengers are fully vaccinated, the agency send a letter to the cruise industry, released publicly. The ship may skip simulated voyages and move directly to open water sailing. You know, unfortunately, folks, vaccines have become somehow political. Not sure how that happens, but it obviously has. I saw originally talking about some of those cruise ships. And take the politics out of it, folks. Myself, I'm not getting on a cruise ship unless I know that basically everybody's vaccinated or everybody's got a negative test, because that's your best chance of not getting stuck on a cruise ship for weeks on end if there's a outbreak that happens to spread. If you get those cruise ships, all right, and they are operating for the best interest of the jobs they employ and the people that they help contribute income to. And the only way that's going to happen, all right, the U.S. just can't say open back up, because if they just open back up cruise ships and the first time a cruise ship gets out there, you have caseloads and you have an outbreak on a cruise ship, those companies are going to drop like rocks. Okay, so this is about their companies, their best interest, has nothing to do with politics. And you're going to see some pretty harsh vaccine regulations, and they're not regulations, they'd be rules from these cruise ships themselves too. Because that's the only way they're going to be able to do business, folks. That's the only way that most people would even think about getting on a cruise ship and potentially being trapped there if there's an outbreak. So you're going to see probably either a negative test required or a vaccine, proof of vaccination, and you're going to see basically that you're either vaccinated or you have a negative test if you're a child and can't get vaccinated. And I think that's the only way they open back up, but you're seeing the first hint of it this morning, and you're seeing the stocks react, but they got a long way to go still. Putting a Carnival on a 3-year weekly, you're talking about $50+ we were trading at prior to COVID. We're still sitting at almost 50% of that price point at 28. Really crazy that these stocks got back to basically 25 as early as June last year when there was so much uncertainty still. The market really got ahead of itself as well before we had a pullback. Royal Caribbean up about 1.5% today. They were as high as 135. Norwegian up about 4.7% today. They're still at about 50% of where we were prior to that as well. Let's jump to some of the airlines. Domestically, all the airlines sitting right basically where we were prior to COVID. JetBlue at about $20 right now. Southwest sitting above that level, 62. We were trading just under that level prior to coming into COVID. Internationally, not quite up to that level just yet, as you got internationally. I mean, there's some big problems right now in the world. American sitting at 21. We were at 30 before we came into that. Delta sitting at 46. We were at about 60 coming into the COVID outbreak. And United will finish it up with at about 53. We were trading at 90 coming into COVID. All right, let's check out some of those stocks with the action this morning. We'll jump over to Apple. Apple shares only up 1%, folks. Watch out. My goodness, right? It's got to be tough being in the C-suite of Apple. Not really. It's quite a life, I'm sure. But it's got to be tough when you crush it out of the park. You beat revenue by $10 billion plus, and the market shrugs it off and says, yeah, we'll basically trade flat. You have Apple trading up 1% right now at 135. Facebook shares giving back some of the gains, but you're still up 6.5%. Solid move on Facebook. Amazon ahead of their earnings after the bell, sitting right at 3,500. I imagine you'll see a slow pause on Amazon until their numbers come out, as in we're just going to see this thing chop around. It's traded up all week. We'll put this on a 20-day hourly. You come into Monday trading at about $33.50. We had $150 in the last 3 days of trading. I mean, it was up 2% on Monday. We paused on Tuesday. We're up, I think, another 2% yesterday. So we'll see how that goes. All right, S&P's up by 27. We're trading at 42.04, and we're going to take a quick break, folks. We're going to come back with Michael from Niagara Falls. We're going to be looking at AMC. Speaking of the reopening, AMC up about 0.5% today. We're as high as 12.22. AMC's been a Reddit favorite. A little bit of volatility recently. We'll jump to AMC when we get back. We'll be talking with Michael from Niagara Falls. Stay tuned, folks. We'll be right back after the break.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's jump right to our caller on the line, Michael from Niagara Falls. Michael, good morning. What's happening?
Yes, good morning there. Can you look at AMC Entertainment on the daily versus the weekly?
Okay, perfect. So I got it up here on a daily right now. I got to go back about 5 years. We were as recently as 2017 as high as $33. You come into COVID, which is so interesting, and maybe the $6, $7 area. You trade to $1.91. We're trading at $10.70 right now, of course. I'm going to put this thing on a weekly real quick, Michael. Backing things up, of course, wild action to start the year. It becomes a Reddit favorite. Now, here's what I'll say about AMC, Michael, when I look at it. Really tough for me to value AMC at $10.70 when prior to COVID, the market was only valuing it at about $6.50. Movie theater business is going to be around. We're going to see a resurgence, man. You know, Disney, I'm a big believer in. If you listen to the program, part of the reason why is they're going to continue to push out box office films to the tune of billions. But this is a tough business, man, and things have changed in a big way. HBO is pushing out.
Bankruptcy? Is it pointed Chapter 11?
I don't know if it's Chapter 11.
They issued a lot of stock, and like the guy running the show he's pretty smart. I mean, he got in there. He issued a lot of stock at $20, and he also issued some debt.
Sure. No. And that's what's probably given them a bid of $10.70, right? Versus when you were trading at $6. I mean, you've seen it. GameStop pushing out so many shares right now, rightfully so, at their valuations. These CEOs, they know it's not a fair valuation when Reddit has shoved these prices to absurd levels, but it's almost self-fulfilling if they can turn things around. I just don't know how this one does. I don't see it going BK, though. I really don't, because there's too much value to them. No.
And what was the impact of hosting the Academy Awards in a homeless train station with Regina King talking about the Derek Chauvin verdict?
I don't know about that one as much.
Will that have a lasting effect on
I don't know about that one as much. But this is such a big business, and you're seeing so much business on streaming that there's always going to be a role here. I mean, at a minimum, Amazon, right? At a minimum, Netflix. At a minimum, Disney. They can all have a role in the movie theater business if they really get in trouble. So I don't see it going BK. I don't. But at $11 right now, at a price that it was trading at last in September 2019, I can't see buying that equity right now.
But they own the real estate of the movie.
No,
they
that's
own
a good
the
one
actual
too.
Land, correct?
There's a lot of parts of it for sure, and that's why it probably doesn't go BK, man. Somebody probably picks it up at a minimum. Michael, thanks so much, folks. Thanks for tuning in. Stay tuned.